April 27th here, 2009. This is Stephen Swancoat here with GannScience.com. I'm going to be addressing a couple questions that most traders have, as well as talking about the methods of WD Gann used in trading Google. Um, First question is can the methods of WD Gann be used in today's active markets as it was back in the past? And the answer to that is absolutely yes. The methods of WD Gann are a proven science that relies on a mechanical trading system based on a sound set of rules and principles. Many of the same rules that W.D. Gann applied, as well as his methods, were used by Jesse Livermore, one of the greatest stock traders of all time. The question today and the problem that traders have is when to enter a trade based on those methods, and when's the safest point to buy. And today I'm going to also address the problem of traders who like to buy low and sell high, but do not like to buy high and sell higher. There's always a fear in buying a stock that is really high in price. A lot of people think you might be buying at the very top. They don't want to be caught in that position and end up not buying a stock only to watch it rocket through the roof until they finally buy it and they end up buying it at the top and it crashes. So today we're going to be looking at Google. First, what I did here is I pulled up the actually it's a 5-year chart of Google. They only go back to late 2004, which addresses even another problem most active traders today have. They don't go far enough back in time and look at history in the markets. Folks, the markets repeat themselves year after year. There are time cycles, there are business cycles, there's a master time factor. Go back and study the history of how a stock acts, and it will act the same way in the future, or you'll find other patterns in other stocks. Going back here in 5 years ago, we see Google coming up here where it shows resistance at the 200 mark, it dips down, and then bam, as soon as that stock breaks that 200 mark, it rockets all the way through 300 and through 400. Then rallies back down until it finally breaks 500, 600, and finally tops past 700 at 747. And the point I'm trying to make today, folks, is that there are traders out there who, as soon as Google crossed 300, were hesitant to buy, thinking it could not possibly go higher. Google then proceeded to go from 300 to 400. They then thought to themselves, oh my god, it can't go any higher, I should have bought it at 300, only to then watch it go from 400 to 500. They're thinking to themselves, how can this possibly be $500 per share? That's absolutely ridiculous. They're only 3 years old. I should have bought it at 300. I should have bought it at 400. I should buy it now, but I can't possibly buy it right now. It's at $500 a share. Then it goes from 600 to 700. Finally, at $700 a share, the trader picks up a couple shares only to watch it dump down the toilet as it peaks at 747. And today, I'm going to show you how the trader could have safely picked a position on any one of those major crossings at 600, 700 mark, 200, 300 mark, which one would have been best, and how to safely manage your risk going to those points. And we're going to go back today, or right now, to the year chart. This is an up-to-date active 1-year chart of Google, and what it's showing here is this in late 2008 was coming down from 580, falling all the way down to 260. If you watch my Apple trade, I show that Apple in late 2008, early 2009 showed a triple bottom, which then had a reversal pattern. Here, Google's not showing the triple bottom. They indicate just a single bottom. Although they do have this triple bottom type look, it's still an upward trend. Remember, an upward trend is higher highs and higher lows, while a downward trend is lower lows and lower highs. And this right here is indicative of a change in trend. I do not know how long this trend will be. I can't even tell you if this is a change in the major trend. This is just a change in trend. And that's all we need to know right now. What I'm going to do is I'm going to apply the rules and techniques of W.D. Gann and Jesse Livermore on how to trade this right now. Let's say we're coming in and we've already missed the mark. You know, we could have picked it up at 260, try to get really lucky and pick a bottom, but picking bottoms never works. And that was seen in the Apple trade. We could have picked it up when it crossed 300, but we don't really know. We're sitting here right now, April 27th, thinking, what should we do with Google? And this is what I'm thinking. This is the methods that would be used by W.D. Gann and Jesse Livermore, is we're going to examine it right now in the now. It's It showed it peaked here at around 390 and then reacted down. It has yet to make a new high. If you watch the Apple video, I'll tell you right now, one of the major rules used by W.D. Gann and Jesse Livermore is when a stock breaks a huge psychological barrier, a 100, 200, 300, 400, 500. Those are huge barriers to break. And one of two things usually happens. Either one, that stock is going to continue with its powerful momentum going up and is going to surpass that and going from 400 to 415 to 420 to 450. Or what's going to happen is that it's going to break through. It's going to go to 405 and have some resistance and then come back down past 400, back to the 390s, 380s, who knows. But those are the two most often approaches that a certain stock will take. So watching Google right now, what we're going to want to do is we're going to want to watch and wait till it sees it till it breaks that 400 mark. And this is exactly how W.D. Gann and Jesse Livermore would do it. They'd wait for that stock to break 400. They would then watch for the first couple upticks. Now, does it break right through 400 and surpass into 410, 415? Did it have an open high open off the morning, jumps up 20 points, or is it slowly gradually coming up, and is it showing resistance at 403, 405, 406? Those are really important. If the stock comes up to about 406, 407, and that's that range, you'll want to go ahead and buy that stock at that point. That's the normal loading point that W.D. Gann and Livermore would use. As soon as it crossed that barrier, they would pick it up. However, to quickly manage their risk, they would follow up with a stop loss in the 390, high 380 range for this stock. W.D. Gann had his rule of 3, and it really applied to stocks in the lower amounts, about 100 or 200. And that rule of 3 said that anytime a stock breaks through the psychological barrier, the 100, 200, 300, it almost always will proceed up if the trend is following up and will not react more than 3 points below that amount. And that's a safe place to put a stop loss. Now realize, though, that there are times, and there are an instance right here. This would have been a time where if you would have bought with $300 when it crossed $300 mark, you would have bought it up here. You would have set your stop loss at below 297, 296, and it would not have been hit right here. However, it proceeded up to 320, 330, and then came back down here to 280. Yes, you would have been stopped out. If you could have taken your shares or whatnot, you would have gone out right here actually when your stop loss would have gone out, and you would have lost either a tiny bit of profit or just your commission. But what we're looking at right here is if Google crosses the 400 mark, W.D. Gann and the rules of Livermore would say purchase it. Set that tight stop loss and watch. I don't know. Then you ask yourself, why not pick it up right now at 380? You know, you can make an extra 20 points. The reason why is because we don't know what this stock is doing right now. It could come up and to right below 400 and then crash all the way back down, making even a new low. Or it could proceed through. We just don't know. It may even go sideways motion for the next 2 years. We can't say. But what we do know is that if it crosses that 400 mark, depending on if it's going to follow through or come back down, is usually an indicative signal of a continuous uptrend. For more information on this, you can check out my website, gannscience.com. I got a lot of trading tips and videos there. I hope you enjoyed this video. But please remember to always do your own research. Never would I take for complete advice. Always do your own work, do your own trades, make sure you have plans, and follow rules. And until then, happy trading, and that's right.